BlackRock, the world's largest asset manager at $9 trillion, has vowed to double down on climate activism by backing more shareholder resolutions on climate change and social issues this year. The $226 billion New York State Pension Fund and the $5 billion Rockefeller Brothers Fund are divesting most of their fossil fuel investments. But Wall Street banks are slower to board this flight to greener pastures. In 2019, Goldman Sachs became the first big U.S. bank to rule out financing new oil exploration or drilling in the Arctic, as well as new thermal coal mines anywhere in the world. But there is no real indication that the oil and gas industry is going to be left high and dry anytime soon. Financing from Wall Street will still come. In fact, Wall Street's 6 biggest banks provided nearly $900 billion in loans and bonds to the oil and gas industry over the past 5 years alone. And the biggest financer is J.P. Morgan Chase, earning it the moniker of world's worst banker of climate chaos by far by environmentalists. Since the ratification of the Paris Agreement in 2015, J.P. Morgan has provided $250 billion in loans and bonds to fossil fuel companies, according to a February Bloomberg Intelligence report. Its closest rival was Wells Fargo, with $193 billion over the same time period. But change is in the air, as mitigating climate risk becomes more of a necessity to Wall Street. Money talks, and lately it's talking clean and green. J.P. Morgan made its debut in the green bonds market in September 2020, selling $1 billion in green bonds maturing in 4 years. And last October, it confirmed its commitment to achieving operational carbon neutrality by aligning with the Paris Agreement goals. No one should expect Wall Street to fully divest from fossil fuels in the near or even medium-term future. Even BlackRock, despite its highbrow climate goals and statements, still holds $85 billion in assets tied to coal, plus holdings in Shell, BP, and ExxonMobil. Its argument, of course, is that it's not a bank, it's an asset manager. It's not BlackRock's money to divest, as it is held in passive index funds.